The one thing I learned in my trading career is that when I started trading the right way, proper position size, only following the technicals, keeping myself disciplined, that's when I actually started making significant amounts of money. And it's very counterintuitive. Most people would say, oh, well, you have to put a lot of money in a trade to make a lot of money. But the bottom line is I made so much more by being disciplined, keeping position sizes small, because I didn't blow my account up. And ultimately, it's like a savings account, letting that interest just continue to compound. When your gains compound, before you know it, you're trading a 2-3 times X account over the course of years, and your gains will naturally compound as well.
Bitcoin fell below its 55-day support level of $27,000 and is currently at $26,851 on May 12th. This led to a 7% decrease over 2 days, causing $100 million worth of long BTC futures contracts to be liquidated. Hello and welcome to Crypto Street. In this video, the upcoming discussion will focus on Gareth Soloway's expert insights and strategies for successful trading, as well as the most recent developments and analyses regarding Bitcoin. So let's get started.
The technicals, learning the charts, that's something that anyone can do, and it's something that I can teach anyone to do. The mindset is something that we each have to work on ourselves. So, for instance, you have to be super disciplined. You can't FOMO into positions. You have to have a regimented rule set about when you enter a trade. So, for instance, when I teach my methodology to my traders, it's very strict. It's 2 to 3 factors. 2 to 3 factors aren't just, oh, I like it, or, oh, I think it's going to go up. It's specific, detailed technical factors that align at the same price point that gives you the signal to either buy or short a stock or a cryptocurrency or even a commodity. And so these are the things that as a disciplined trader you have to abide by. You are going to get tested. The markets will test you. Twitter, social media, they will test you. You'll see people chasing something. You're going to want to chase it. You need to hold your horses, kind of regain your composure, and be steadfast in terms of not chasing positions. All right, chasing is the ultimate sin in investing. It will lead to losses. All right, so again, when it comes to mindset, you have to be so strong in mindset that you don't let yourself waver on anything. The most disciplined traders are usually the traders that trade less, and they ultimately make a lot more in money and profits.
Bitcoin extended its decline on May 12th, but analyst Philip Swift, co-founder of trading suite Decentrader and creator of data resource Look Into Bitcoin, does not expect a deep correction. He said it was interesting to note that the long-short ratio has been climbing as the price has trended down.
So the bottom line is, when it comes to trading, you have to first realize that you're not trading stocks, companies, cryptocurrencies, you're trading human emotion, right? So it doesn't matter what chart it is, the technicals will work for it. It could be oil, it could be gold, it could be silver, it could be Bitcoin, or it could be Apple stock. The bottom line is people buy because they are greedy, they think price is going up, and they sell because they're fearful, they think price has gotten too high, and they want to get out of the position. So all charts are equal, meaning that if you have 1 million people trading any chart of anything, the reactions, the discipline, everything that goes into that is going to be the same. Once you realize that, you start saying, okay, well, I can trade anything out there. And that's why the methodology that I use is amazing, because it's applicable to anything out there: crypto, gold, silver, commodities along the way, stocks, and everything else. And now my methodology, the bottom line is, it comes to key points within the charts. So you're looking for these things called bottoming tails and topping tails. You're drawing trend lines. Essentially, you're looking to generally go counter trend. Most people will tell you that that's the scary thing to do, and they'd be right. If you don't know what you're doing, counter trend trading, meaning if stock is falling dramatically, it's very dangerous to pick it up. Once you learn how to read the charts essentially guide you to the levels where the high probability points are, where a reversal will take place. So I'm looking at these different things that have happened for hundreds of years in the charts, in fact, thousands. You go back to the tulip mania in the 1500s, you go back to ancient Egypt, and you chart anything, you're going to see things that basically do replications. There's patterns that repeat over and over again, and all I'm doing is recognizing those, finding the levels where those will turn around, and I'm playing those accordingly, letting probabilities take their course.
Analysts are optimistic about Bitcoin's future due to the expected continuation of its halving cycle, which has been consistent until now. Investor and entrepreneur Alistair Milne suggested that the current time is ideal for buying Bitcoin based on previous cycles. However, in the short term, Bitcoin may face challenges due to the recent relief rally in the US dollar index, DXY. Bitcoin's performance has historically shown an inverse correlation with the DXY.
Absolutely. So if we look at my chart here, we have a chart where this is the chart of Bitcoin, and it's probably the most famous call that I ever made when we were at near 69,000. I said, guys, don't trust this. Everyone else was extremely bullish on Bitcoin, saying it was going to be 100,000 by the end of November, and then 200, 500,000 after. I looked at the chart and I saw multiple signals telling me that it was going to be a reversal and most likely a cycle top. So the first thing is to take a look here. If we draw a trend line from that first high, which was around 65,000, and we bring it right across, notice how price on Bitcoin did get above a couple times. Okay, now most people would say, oh, that's a breakout, right? And that's the common theme that we saw, is people saying, oh, it broke above the previous high, now it can go to 100,000. There's something in the methodology I discovered, and again, this is something I actually created. It's called the confirmation signal. The confirmation signal tells you that when something gets above a previous high, meaning people think it's a breakout, you need to see 2 consecutive higher closes for it to actually be considered a breakout. The reason is because algorithms and institutions will play games. They'll push something above a previous high, ultimately to reverse it, knowing that a lot of people will get stopped out on their shorts when it goes above that high, and then also people will go long when it breaks that high. So it's a way of getting most people on the wrong side of the trade, and institutions do this nonstop with stocks, cryptocurrencies, and etc. All right, so what we see here is you got to close above, and then you reversed back down. You got over here a close above, and you ultimately never got a secondary close higher. These were all games by big money, keeping it and kind of getting people to be on the wrong side before reversing. Now, that's just part of it. Number two, you had an RSI negative divergence out there that was massive going on here from this high to this high. You had a higher high, but the RSI was actually declining from those two periods. You also had sentiment indicators going on where you had mass euphoria of double top kind of nature, that if you study psychology and you study human nature, it was telling you that this was the end of a run, not the beginning of a bigger breakout. I could go into another 10 factors on this chart, but the bottom line is that when you learn the charts, think about this. A chart with which most people look at, even you, Michelle, you might look at a chart, you have some background, but for the most part, it's like, okay, well, what the heck is it telling me? It looks like a foreign language. When you learn how to read the charts, you start translating the charts into the English language or whatever language you are accustomed to. And they do start speaking to you. And you can start to garner information that most people will have no clue about. It is unbelievably powerful. So this was a great call. And again, it was something that the charts were alerting me to.
On May 10th, Bitcoin formed a long-legged doja candlestick pattern, which showed a lack of direction from both the bulls and the bears. However, the sellers eventually took control and pushed the BTC price below the support line of the symmetrical triangle pattern. If the price bounces back from this level, the bulls will attempt to push the BTC-USDT pair above the resistance line. Conversely, if the price drops below $25,250, it could potentially lead to a further decline to $20,000.
I've had in my early years of trading, there was a situation where I had just gotten my account up to 100,000 and I thought I was king of the world. And then in one day I did the wrong things and I didn't abide by rules and I got into a position and I lost 70% of that account, 70,000 gone in one day. And it is extremely humbling. I've become, because I've been humbled so many times by the market, it makes me always look over my shoulder in the technical speak of being very cautious with my investments. Even though I'm right so much, I still always expect to be wrong. I think the other thing is, too, it translates into my life. I've been humbled by the market and almost gone broke so many times in my early career that even when I buy a house or even when I buy a car, I like to pay off that note ASAP as fast as possible when I have the money, because I remember the feeling of losing everything. And I just, in my head, I'm saying, well, there's anything could happen tomorrow. Life is not a given, right? We have to live for today, but at the same time, we have to save for tomorrow. And you might be in a scenario where something could change tomorrow. And I don't want to have these bills hanging over my head. So pay it off, get it done, and just live as if that next trade could go against you. Always be cautious in the markets.
For sure. We would like to thank Gareth Soloway for sharing those valuable insights. Now moving on to a common question. Is it possible that the dollar will become obsolete in the future and digital currencies will take over as the only means of exchange? Please leave your opinion in the comments below. And, as always, don't forget to like and subscribe for more content like this. We'll see you soon in our next video. Thank you for watching.